The market has closed for the session, and Ondas Inc., trading under the ticker symbol ONDS, finished the regular trading day on July 22, 2026 at exactly $8 per share. That represents a solid intraday gain of 4.44% above its previous close of $7.66 after touching a high of $8.58 earlier in the day on massive trading volume that surpassed 175 million shares. Most investors looking at Ondas stock right now see a volatile small-cap defense play riding the hype of autonomous military hardware and drone technology. The surface narrative suggests that this is just another speculative ticker surging on military headlines and momentum traders. But if you pull back the curtain and examine what is actually happening behind the scenes, you reveal a far more complex picture. Ondas is attempting a massive strategic pivot from a niche software-defined radio provider into an integrated multi-billion-dollar autonomous defense heavyweight. The central tension driving this stock today is whether its aggressive M&A strategy will build a defensive tech monster or dilute current shareholders into oblivion. The broader market expects a classic microcap story where big order announcements create a temporary spike before the stock inevitably bleeds back down, but the reality hitting institutional desks tells a different story. The company recently announced $70 million in new orders across its autonomous defense platforms in just 4 weeks. That single 4-week order run represents over 13% of its entire full-year 2026 revenue target of $525 million. When a company pulling in around $50 million a quarter suddenly logs $70 million in new bookings in less than a month, the operational scale changes fundamentally. Yet, despite this commercial momentum, the stock has spent recent weeks under heavy pressure, dropping down toward its 7-month lows near $7.26 before this latest bounce. Why is there such a disconnect between order momentum and share price stability? To understand the trading price movement in Ondas stock, you have to look at how retail and institutional investors manage their positions across major brokers. Whether traders are tracking price action on the Robinhood app, placing precision orders through the Interactive Brokers platform, or holding shares inside a Schwab Intelligent Portfolios account, the order flow on ONDS has been absolute chaos. The stock carries a high beta, meaning it moves with extreme violence compared to the broader markets. High short interest and fears over share dilution have created a massive tug-of-war. When traders on platforms like SoFi Invest or Fidelity Brokerage see a stock swing 12% intraday on 175 million shares of volume, they aren't just looking at retail buying, they are seeing massive institutional repositioning. Institutional activity has been a double-edged sword for Ondas stock. On one hand, funds holding small-cap benchmarks via the iShares Russell 2000 Index Fund or Vanguard Small-Cap ETF maintain structural exposure. On the other hand, hedge funds have been heavily shorting the stock as a hedge against its massive acquisition spree, specifically the $875 million deal to acquire DZY Technologies. Deals of that size for a company with an equity market capitalization hovering around $4.5 billion create immediate structural friction. Investors using self-investing tools, whether browsing Robinhood fractional shares or evaluating Fidelity mutual funds, are forced to ask, is management overpaying to buy revenue, or are they successfully securing a dominant position in autonomous warfare platforms before the rest of the market catches on? If you're following Ondas stock across your brokerage watch lists, take a second right now and comment below with how many shares of Ondas stock you currently hold in your portfolio. To truly evaluate whether the current $8 price tag is a discount or a trap, we need to strip away the recent headline volume and look at the underlying operational engine. Historically, Ondas operated through 2 primary segments, Ondas Networks and Ondas Autonomous Systems. The foundation of their technology was built on FullMax, a patented software-defined radio platform created to provide secure, wide-area private broadband networks for mission-critical industrial applications like Class 1 railroads, electric utilities, and oil and gas operations. That legacy business provided reliable, steady technology, but it was never going to drive explosive multi-billion-dollar market valuations. Recognizing that reality, management aggressively pivoted toward autonomous platforms, commercial drone infrastructure, and defense technologies. Through their Optimus system and Scout system, they built automated data collection and drone-in-a-box solutions. But the real step change came with their push into counter-UAS or CUAS technologies and air security. Products like the Iron Drone Raider, an autonomous interceptor drone designed to physically neutralize hostile small drones, and the Centrix Cyber RF platform put Ondas right at the center of modern military priorities. Recent defense integrations, including technology partnerships with major defense primes like Lockheed Martin and strategic collaborations with Palantir, provided the validation the market needed to see that these were not just prototype concepts. When you look at past financial performance, the top-line numbers look stunning on paper. First quarter revenue for 2026 came in at $50.1 million, which was a tenfold increase year over year, alongside gross margins expanding toward 49%. However, smart investors analyzing the balance sheet through interactive broker schedules or detailed corporate filings know that GAAP profitability remains complicated. Operating losses for that same quarter were $42.7 million. The net income boost reported in recent quarters was largely aided by non-cash warrant accounting adjustments rather than pure operational cash flow. That's precisely why the stock trades at a heavy discount relative to consensus analyst price targets, which sit up near $18 to $19 per share from firms like Stifel and Needham. Wall Street sees massive top-line potential, but the Main Street tape is pricing in the continuous risk of share issuance and capital raises. Looking forward, the expectation versus reality dynamic will be decided by execution on backlog conversion. The market narrative assumes that integrating large acquisitions like DZY Technologies will lead to operational friction, margin compression, and further equity dilution. If that expectation plays out, the stock could easily break key technical support levels below $7. However, the alternative reality is starting to take shape in the order book. If Ondas can seamlessly convert its recent $70 million order surge, which includes major international defense contracts like the $6.9 million counter-drone deal with the Australian Department of Defense, into high-margin recurring revenue, the operational leverage will be significant. Management is projecting full-year revenue to reach at least $525 million for 2026, with long-term gross margin targets set above 60%. Whether you're managing an active trade through Robinhood stock trading, researching individual stocks on SoFi Active Investing, or building out a long-term defense allocation inside Fidelity Wealth Management or Intelligent Portfolio setups, Ondas stock demands close attention. The headline numbers look impressive, but the real story is in the margin conversion and cash burn. At $8 per share, Ondas is no longer just a small speculative drone play. It's an emerging, high-stakes defense platform testing whether rapid acquisition can successfully transform into sustainable, long-term shareholder value.